We need to continue to find ways and be flexible in our disclosures. Good, transparent disclosures are always important for investors, and being proactive in your outreach to them. Your investor base may change, but what you need to do with them hasn't changed. Being proactive, reaching out, finding what they need, and how do I give that information out publicly so it could be consumed.
Hello and welcome to the REIT Report. I'm your host, Sarah Borgson-Keto. Today's episode is being recorded on location at the 2026 FTSE NAREIT IR Symposium at the New York Stock Exchange. I'm joined by Dave Bujnicki, Senior Vice President of Investor Relations and Strategy at Kimco Realty. Dave joined Kimco in 2003 as an accounting manager before moving on to the investor relations side. Dave, welcome to the podcast.
Thanks for having me. Pleasure.
In addition to marking the 35th anniversary of Kimco's IPO, 6 is also the 10th anniversary of the NAREIT NYSE IR Symposium. As you look back over the last decade, where do you think the biggest changes have occurred within the IR function?
Sure. So there's quite a few of them, and I realize I've been to every one of the IR symposiums over time, so that's some staying power. So really, there's been a handful of changes over the last decade. This is actually one of the most cyclical industries, and there's no reason that IR hasn't changed as well. I think the two biggest areas, one I would say is just the way investors look at companies, as well as the same time the investor base and who that is. In terms of the way investors look at companies, for when I first started out, it was really focused on net asset value and looking about what you could do, your cost of capital, what you could do in terms of to improve your portfolio quality, the cap rates you were buying at, and were you trading at a premium or discount. And that's really where the focus of most modeling happened when I was talking to the analyst and investment community. They really wanted to spend the time on the net asset value model. Very little bit on the earnings model, which brings us to today. Now, everybody's really focused on earnings growth and earnings model, and really dig into that. I don't think I've really spent in the last 5 years a conversation on net asset value modeling with most of them. We still put the information out there because it still has some relevancy, but even in our board presentation, that we don't spend much time on it now. The question is, all right, how are you growing in relation to not just yourself, but your peers, and how are you managing your cost of capital, and what does that look like on the operating side in terms of like your same side NOI, and then just overall earnings growth. And I think a lot of that has to do with the shift in the investor base. So the REIT dedicated investor, which were generally long-only investors, they've seen a meaningful erosion in their assets under management. And unfortunately, a handful of them have gone away, and they've gotten to the point where they're not the marginal or incremental buyer of REIT shares today. I think what you're seeing is continued rise of the passive investor who are buying things just because of obviously fund flows that are going in there, whether it's someone's 401k or somewhere else. And at the same time, the rise of hedge funds who are more short-term focused, fast money looking at it, and they're really focused on earnings and driving absolute performance on their P&L. And so it's kind of crafted different disclosures, different conversations. So I think that's been the most meaningful change that I've seen in the last decade.
So given all those changes, where would you say you spend the most time in terms of educating investors?
Yeah, I think today, right now, is because we're in the open air shopping center asset class. And that's been a really tough area over the last decade, really because you've gone through the retail apocalypse, you went through COVID, and now, believe it or not, and then also e-commerce, right? We had to deal with that. So today, our operating fundamentals are the best that they've been in my 23 years I've been in Kimco. And it's really helping investors understand if it's the best operating environment you've ever been in, then why are we not seeing larger earnings growth? Why are we not seeing fundamental changes within the leasing structure and where it is? And really just trying to help them educate the difference between what's more, I would say, academic in terms of the modeling versus reality that they have to go through, because there's a big difference between when you sign a lease, they expect thinking that maybe it's going to cash flow right away. And the idea is to explain to them things take a lot longer than what you're modeling out on paper, and trying to benchmark and kind of manage expectations a little bit better for them with the investor class. And as I indicated, we have a different shareholder type base today. So maybe there's more generalists involved in the stock. And then when you're talking about REITs and FFO, it's almost a different nomenclature that they have. And you got to educate them. It's almost taking a step back and helping them understand what drives earnings, what are the different semantics that we use and how they marry up to what they're looking for, and what are the key things that they're interested in. So it's maybe cash flow, it's dividend growth, stability of the environment, and why if people are shopping online, it's really still a positive for shopping centers and REITs in general where they are.
Yeah, I mean, you've got a great story to tell, so.
Yeah, the other thing I would say is really capital allocation is the big one, right? Because what could we do with our portfolio? Most of us, my peers, have spent a lot of time really dramatically improving the balance sheet and also right-sizing their portfolios in terms of, having the right assets in the right markets. And now when you're looking at it, all of us are trying to do the same thing. As I mentioned earlier, it's about FFO growth and how we're driving that. So right now it's focused on capital allocation through accretive recycling, selling properties, especially in a tight market that you can get low cap rates for. And how do you redeploy that capital accretively into whether it's shopping centers? Kimco is doing things more in multifamily and other asset classes. And then at the same time, what other ways can we pull levers? What can we do on the balance sheet? If we have a cost of capital advantage, do we issue equity under an ATM? Or if unfortunately the stock has a pullback, then maybe because the balance sheet's in good shape, now we're starting to utilize a buyback program. So it's the different levers and just walking through the investment community about the levers we have and how we're executing on them.
So do you have to sort of shift where your priorities are in terms of getting that message out to investors?
I think it's consistency of the message more than anything else. It's really just, laying it out for them and then giving them milestones, how we're achieving. In this instantaneous information environment that we live in now, everybody's wondering about how what's happening in the macro is impacting your strategy and what you're doing. And are you still on course, or is something going to disrupt that? I think that's the biggest thing in terms of just letting them know that, we're still on track. And this is why this thing may not particularly impact us, because most of the things that are happening in the macro are more on the short-term side. And as we know, real estate is a long-term business. And I think sometimes you got to just bring them back into the bigger picture.
Yeah, I was going to ask you about that, how to keep the focus on the long term. It's so much.
It's hard. It really is hard today. And especially hedge funds, right? Mm-hmm. Their ownership period is, they'll buy and sell you multiple times over the course of the year, as opposed to a long-only REIT investor. So I think that's where you got to continue to gravitate them. They have different tools. They look at things a different way. And for us, it's really just, again, trying to ground them in, hey, here are the fundamentals and they're not changing. And here are the different conversations we've had with retailers. And here's the different kind of analytical tools we have that gives us the confidence that what we're doing is still succeeding. While at the same time, if there's a shift in the environment, it's up to us in the IR community to make sure that we're flexible enough to pivot and have to put new information out there to kind of meet their needs. Perfect example of that was during COVID, where there was a question on collections effort, and then people started bifurcating with essential versus non-essential tenants, something we've never done before. And then about how we're doing on our collections and what are our reserves like. And I think that's something we put out there. And I think most of my peers would agree that the happiest day is when we had to stop disclosing that information because it was no longer relevant. But it was at the time.
And Dave, something I'm sure that you and your colleagues are talking about today is the role of AI. In what ways is that making your life easier, but also producing its own challenges for you?
I'm a big proponent of AI. I think it's a dawn of a new era. I think, it's going to be a paradigm shift. I'm encouraging. Kimco is really taking a charge for everybody within the organization in the different functional roles to really dig into it and find ways that it can increase productivity and make us more efficient. And I've passed that down to my entire team. And I don't think there's any shortage of what we're going to be able to do. I think that's a case of we don't know what we don't know at this point. I think that there are some easy productivity objectives and wins that we've already have, whether using AI to help prepare for earnings, whether it's the earnings call script, whether it's reviewing an earnings release, sometimes just reviewing it for sentiment purposes. Does it sound a little on the positive side or does it sound overly negative? Same thing, going through and doing prep questions ahead based on things and transcripts from other questions we've gotten from recent conferences we've attended. Or what are some of the big questions in the environment, the macro, that people want to know and how we prepare. So it really allows us to be better informed, better prepared when we go on to our earnings call. At the same time, it's, all right, look at our earnings presentation. Where are some gaps that could be misinterpreted? And what could we do better? Or how can we frame our narrative and make sure the messaging remains tight and on par for where it is? And that's just the easy part of it. There are areas that we haven't even started about, such as who should we be meeting with on the investor side? Who's got capital that they can allocate that we should be making sure we get in front of? And how is that most efficient to get there? And is it just here in the US, or should we expand it more globally into other pockets, especially giving management time? Because, everybody wants a piece of management time, but what's most efficient? And so I could go on and on about what the opportunity set is for AI. It's going to be hard, I think, for some people to adapt to it, but I'm excited about what it holds.
Yeah, definitely. So beyond technology, I'm also curious about the role investor feedback plays in your internal strategy, particularly board level discussions and management decisions.
Yeah, I think it's imperative and critical that you solicit that regularly, because what you need to know is the messaging that we're putting out there, is it resonating? Is it making a meaningful difference? And at the same time, you want to know and be strong-skinned enough to be able to absorb candid feedback. Now, you have to kind of work through the noise and say, all right, what's noise and what's constructive for us, and understand what's resonating. And if there's something that isn't, maybe we need to pivot in either our messaging or our strategy, where there could be areas of concerns. And that just goes from normal earnings and the portfolio management. Other conversations that investors have with us is at the board level, governance, as well as ESG overall. They want to understand about how we're approaching, governance in terms of the board members, how we come up with our composition, board refreshment, things that in the past may not have been as important, but as passives have become a more active and a larger contingent of the shareholder base, they're not necessarily interested in the operating fundamentals of the business, but they are interested in governance. So that's where you have to adhere to that and listen to them. ESG more recently has kind of taken a step back just because of things in the overall environment, but it's still relevant, especially if you have a large European shareholder base like Kimco has. So acknowledging that there are things that they're interested in. And so we need to, one, make sure we understand what they're interested in, how to measure it, what's our reporting requirements. And so oftentimes we'll serve as a gatekeeper to other functions within the organization, bring our ESG team in, bring our HR team in terms of our hiring and capital management into these conversations. So it's not strictly just an IR or the C-suite, it's other people within the group of the company joining us.
David, as you look out over the next few years, what do you think IR teams need to focus on in order to be the most effective?
Oh, that's a good question. I think the first thing we touched on earlier is adopting and trying to lean into AI and what that could do to help us be more productive and efficient in terms of finding those who have capital, where their shareholders are. But again, what's meaningful and important for investors in terms of how they're evaluating the company and what we need to do to make sure we're meeting their needs. I always said investor relations is almost like a customer service job. We're out there to be a liaison between the executive and the company with the investment community and helping them understand about what's our strategy, but what's important for you and how you measure that. And so we need to continue to find ways, and as I mentioned, be flexible in our disclosures. Good, transparent disclosures are always important for investors, and being proactive in your outreach to them. Your investor base, as we mentioned, may change, but what you need to do with them hasn't changed. Being proactive, reaching out, finding what they need, and how do I give that information out publicly so it could be consumed.
And Dave, as a veteran of the IR Symposium, any particular benefits that you can point to that you've gained?
I appreciate that they called it the veterans as opposed to the seniors. Constant being solicited with AARP membership stuff. But I think one of the biggest things is that I'm thankful for NAREIT and the New York Stock Exchange for doing these symposiums, because when I first started out, The investor relations community is probably one of the most collegial and fraternal groups that I've ever been a part of. And I've had a lot of people help me along the way into what I can do better, things I should be aware of, how to approach this job, or things to be concerned about. And it's really just a good opportunity to continue to share that with other generations and people that are coming up. And it's almost like giving back a little bit for the way it is. And my wife always says, I never met somebody who loves their job as much as me. And I think it's really because it's really, as I said, the relationships you build over time, not just with my other fellow IR people, but it's also the investors and the analysts. So as you indicated, being a veteran, I've been doing this for quite some time, and I've gotten to talk to the investors. We share about how kids are doing, how they've grown up, how they've changed. All of us, our hair and our line is changing, especially me. But it's been a wonderful time, and I encourage people to, especially new IR people, to not be afraid to dig into the details. I think that's what makes them successful, is if the more they know about their company and their business, and it's almost being a jack of all trades, the better they'll be, because they'll help the executive team understand what the investors are asking. And at the same time, you're able to answer the questions for investors as well.
Brilliant. Dave, thank you so much.
Thank you so much for having me.
And to our listeners, if you enjoyed this episode, please subscribe on your favorite podcast platform.